If you enjoy this content, please take a moment to rate and review it. Your feedback will greatly impact our ability to reach more people. Thank you. What's up, man? How the slopes?
Slopes are good. We had a fun day today out in Deer Valley, so I had to ski. You know, normally I'm a snowboarder, but there's no snowboarding here, so picking up skiing very quickly.
Oh, is that right? No snowboarding allowed?
No snowboarding. No.
Oh,
which is fine.
Okay.
I mean, it's good. It makes me branch out a little bit. So I've been skiing again, which I haven't done in 25 years. It was,
but skiing's like easier than snowboarding, isn't it?
Yeah. Skiing is, I'd say it's more forgiving. Like you can you kind of know you're getting unstable. You can slow down. Snowboarding, you're down right away. So it's been fun. It's beautiful here. Sunny, really warm. It's like 38, 40 degrees. So it's been great.
Oh, it's perfect. That's perfect. All right, we have a big show and also a time limit. Both you and I have to. You need to get back to fun, and I got to get back to closing out the week with all the work that we got going on. But but what a week! Oh,
I mean, it started with a bang, and it's just gone from the whole week. It's been news.
What a week! All right, so look, with no further ado, let's dig in. So if you have not heard about Citrini Research, now you know the power of Substack. Citrini is a guy who actually used to be a MedTech founder and then, got into doing analysis, has built up a pretty popular Substack following, and did this thought exercise at the beginning of the week. The title of his piece is The 2028 Global Intelligence Crisis. And it's basically like trying to map out the macro implications of, what happens when intelligence continues to proliferate at the rate that it is. And it's a pretty, big doomsday scenario that he kind of, posts here. And this is right on the heels of the SaaS apocalypse, right? So the market hadn't really even had a chance to adjust to that. There was so much talk, I feel like, in the week prior to this week about the fact that we really needed to shift now into value analysis and Salesforce. We're not going to go too deep into it, but Salesforce had a great earnings announcement, right? So we're going to have to go company by company, right, on the public markets to kind of see which ones are going to have staying power. And again, I thought the Salesforce beatdown was unfair because they were one of the first out with the whole agent force. We're going to do agents thing anyway. Yeah. So I feel like they're very on top of it. But anyway, this Citrini piece, and Vic, I'll let you, try to encapsulate a little bit of what he's talking about here. I reviewed it. I thought that he covered too many industries to possibly be an expert on it. I think it was a thought experiment. I don't think he even thought he was going to have the impact on the markets that he did. But what a drawdown that came down on the stock markets this week from a Substack post. I think this is the first time ever that we've had a Substack post actually materially shake the whole market to its knees.
Yeah, no question. I mean, it's a well-written piece. The basic assumption is that, something like half of white-collar workers lose their job, then therefore lose purchasing power and stop buying as many things. And then you have this cascading negative feedback loop that pulls the economy down. There's been these doomer proposals for various things. At first it was AI is going to kill us with paper clips. Then it's, the runaway 2027 scenario. AI is very powerful and that makes it kind of scary. So I think we'll keep having these pieces come out and they're plausible, right? But I think it's only half the story. I mean, when our business, I was talking about our own business, what we're experiencing, when we get 5, 10, 20 times more effective as our team, we have a small team, but our team has gotten much more effective. We still need the people that we have. We're just doing more. And so I'm not sure that it leads to massive job loss. Like tasks that people will do will be different, but I'm not so negative. But yes, I think the market is highly valued and kind of nervous about lots of things. And so this caused a big sell-off.
Yeah, it's very easy for us to forget that we went on a 5-year run, right? How many episodes, Vic, did we just go all-time highs again this week, all-time highs again this week, right? And the question was really like, what was it based on, right? I mean, the multiples just really got way out there, and they were concentrated in the Mag 7, but now we've got these frontier models that are eating away, and they're privately held. They're not even on the public market, right? I mean, the model of the moment is Claude. We're going to talk about that at the end of the show. And Claude is eating into all manner of things, right? You know, at the moment. And so, look, I guess I think, and we're also going to talk about job loss here in a second. I think that the market is finding any excuse to try to pare itself back, because it's realizing that the basis under which it kept ratcheting up future valuations and the multiples is more and more unlikely to hold, right? And as people come out with these well-articulated scenarios, it just adds another sort of piece of friction to that foundation. And, you know, maybe all this stuff is going to come back down to earth, you know, to maybe the levels that it was at 3 years ago. Who knows? But it's had a great run, and now it's looking more like it's time to trade. You know, it's time to make sure you know when to sell.
Yeah, no question. I mean, I think that it is no longer the case that AI is going to lift all corporate boats. If you're a software business, you automatically benefit from AI. I think if you're relying on kind of let's take Bloomberg terminals. It's a very kind of archaic interface, but once you learn it, you can navigate around it by muscle memory. And so it has been the dominant source of information in financial markets forever. It costs like $25,000 for a terminal, and then each person has to get a license. And Bloomberg is not the system of record for any transactions. And so those kind of businesses where their moat is really this like usage pattern and the interface that people have gotten used to, I think they're in a lot of trouble. That's really challenging. Salesforce, if you're the system of record for the contract that was negotiated with this buyer, and you have, SLAs in there, and Salesforce is managing that whole relationship of the customer, I think they can then add AI on top of that and really make Salesforce much more valuable. So it's not going to be equally distributed. I guess we're going to have some winners and some losers in a pretty big transition.
Agree. So let's move to our next story and talk about job loss. So staggering announcement from Jack Dorsey, the CEO of Block, was formerly Square, that they are letting go over 4,000 of their previously held 10,000 employees. So, I mean, we've looked at some pretty big cuts. We've seen some 10% cuts, some 15% cuts. I cannot remember any time since we started recording this show that we saw a company proactively, because of efficiencies they're able to gain through AI, cut more than 40% of their staff in one cut. Just an astonishing level of a layoff. And I think what you have to sort of pair with this is that a little over a year ago, Block was one of the very first companies to come out with their own open source agent that leveraged all of the frontier models, called Goose. You and I both listened to episodes with their CTO, who kind of, ascended to the CTO position, wasn't even the CTO, ascended to the CTO position, and was, promoting Goose. And it's kind of scary to think that, maybe everybody in the company was using this AI agent to help it do its work. And meanwhile, this AI agent was actually learning how to do their job, maybe documenting every aspect of their job. And that gave Block as a company the power to do a layoff of this magnitude, right? Because the thing you always think about is, if you're laying off this many people, who's going to do the work? Where's the institutional knowledge going to leak out? But I think what's happened is, after a year of these employees using Goose, they've captured it all. They know the workflow patterns. They know exactly how the work is supposed to be managed. They know where the data is stored, and they can continue. They've assessed and have a go forward plan that they can operate with a cut of over 40% of their base staff.
Yeah, no question. I mean, I think we're really going to see founder-led businesses like Block. I mean, Jack Dorsey is visionary and has enough control of that business and influence that he can make a incredible strategic decision over a weekend, and yet still attempt to keep the culture growing. I mean, he really focused on, we're going to be flatter, nimbler, smaller teams, able to do more with, fewer levels of management. I think there's not a lot of companies that are not, like, if you have a normal kind of board corporate structure and leadership team, it's really hard to execute that kind of pivot that quickly. But at the same time, I think the stock market rewarded it. It's been really successful. And I think you're right. Goose sort of laid the groundwork so that now they can sort of empower the 6,000 workers that'll stay to really kind of make Block stronger, which is incredible.
So here's the crazy part. Goose is open source. How many companies do you think have also adapted and adopted Goose and are looking at what Jack Dorsey did and how the stock market rewarded him with a 22% stock boost and are saying, let's check our Goose logs. Let's see, let's see how much information we've siphoned off of our employees. Also, Vic, I'm interested to hear from you. How do you balance your positive view and notes about job loss and how you think it may not be that intense with the undeniable fact that this week we've got one of the most important, Square is a very important company, Block, whatever. It's a very important company, one of the most important tech companies that is publicly traded, just let go 40% of their staff, right? So doesn't that reinforce to Trini's point?
It does if those people can't find anything else to do. So that, to me, that's the question. Like, do we get an expansion of economic activity because all these services that we used to pay people to do, now we can do for a third the price? I'm going to do 3 times as many. Like, I'm going to do much more. Like, let's take our valuation process. We typically run a valuation process, depending on the fund, either quarterly or semi-annually. And now I'm looking at maybe we should do it monthly. Maybe we should do it more often because we're going to keep the people we have, but we're going to do much more accurate. We're going to sort of be able to use this information. Maybe we'll help a company faster than we might not have known for 6 more months. I'm just optimistic that we'll find a way to utilize those 4,000 people in more productive ways at another company. Now they need to be willing to learn. That's the difference. Like, are you curious? Are you willing to think about how you could be productive using these new tools? And I think there's a lot of people that are not curious, but they're very easy to learn if you want to dig in.
Yeah, I think the unknown for me is whether or not these people will have to become entrepreneurial. I think there's a question about who's going to hire these people, right? I mean, and if there is a rehiring of some percentage of them, is it going to be meaningful enough to offset sort of the size of the cut, right? I mean, it feels to me like we are moving in this era where entrepreneurship is just going to be an imperative for so many people, and they're not ready for that. Like they still want to work a job.
Yeah.
You know what I mean? Like they want to work a job, and that world seems to be sunsetting.
No question. I mean, it's your book, really, like that entrepreneurial mindset of, I'm going to build something for myself and my family because I can learn and I can bring something to customers that makes their life a little better and charge for that. You could do that in any market, really. We focus on healthcare because it's huge inefficiencies. But I think there's a great opportunity for people to start small businesses and have a lot of success at that. But you need to be willing to have that entrepreneurial mindset, which is a learned skill, but you have to be willing to try.
All right, let's run through our VC rundown. We're going to start with MedScout raising $10 million, launching AI agents for MedTech commercial teams. This is backed by Fulcrum Equity Partners. We like the folks at Fulcrum, so congrats to everybody there. Participation from Live Oak Venture Partners and Stage 2 Capital. MedScout has built a commercial engine for MedTech, and they are helping companies to leverage AI to, fill slots, effectively helping them do this more efficiently, helping lower the cost of customer acquisition, translating commercial priorities into clear, specific actions. So I think we're going to see a lot of sales engineering turned into AI agents, turned into new platforms that start to emerge and replace old modalities of customer acquisition. And MedScout looks like one of those companies that's on the rise.
Yeah, no question. The capabilities of the frontier models combined with tools into what's called agents is significant. And I think most companies haven't created the culture, the workflow, the teams, the educating their own staff on how to really leverage this. It's more of a how do we reorient how we do the job in order to capitalize on these tools, then they're not ready yet. And so I think this is an idea where they're going to bring AI agents to really solve almost job functions or various tasks for companies and package the agents. I think it's really smart.
Next up, Altman-backed startup Verifiable rolls out AI agent to automate credentialing. Verifiable, a healthcare credentialing and monitoring startup, is rolling out an autonomous AI agent for end-to-end credentialing. The tool is a first for the industry. The company claims Cred Agent can automate every part of the credentialing process. The tool can deliver up to 10x productivity compared to human specialists based on early pilot data. So a couple of things here. Obviously having Sam Altman is, a big boon to your PR when you're announcing a funding round. But I think also credentialing is a space that I have generally said I don't want to have anything to do with. It looks really attractive. Very few companies have actually tackled it in a meaningful way. We have, the good folks at Provider Trust who are friends of ours who are doing an unbelievable job in this space. And with all that said, I do think applying AI agents to any business model in health tech does kind of make it fair play. So it's interesting to see, a Sam Altman-backed AI agent company tackling credentialing as a new entry into the market space.
Yeah, no question. I mean, as a society, we spend $1 trillion a year on the administrative of healthcare, getting docs credentialed, getting them paid, doing all the claims. It's $1 trillion a year. So it's a huge space, big problem. I'm happy to see this. And I'm also a little biased because we invested in a company called Lanyard Health, which is taking a different approach, sort of automating it through kind of an automated tech-enabled service at first, because they believe that it's going to take 2 or 3 iterations to get to full automation. But I think that's a huge market and plenty of room for both answers to compete it out and try. Obviously, I like the Lanyard people because I'm biased, but good. It's plenty of great to see them, challenging Lanyard and going full automation. We'll learn a lot from them.
Yep, agreed. All right, this is Axios Pro. Third Way Health raises $15 million for front office AI. So this deal was led by Health Velocity Capital. Tell me a little bit about Third Way Health, Vic.
Yeah, so Third Way, I just lost my ability to look at it on Axios. I don't know what happened with my thing, but it's the front office. So it's like booking appointments, all of those things that interacting with the customer. It's really been the second place after revenue cycle that there's a huge opportunity to really make it better for the clinicians and the workers in the health systems and providers, but also the patients. I mean, I don't want to be on hold for 30 minutes. I'd rather just talk to an agent and get rescheduled quickly. We know the folks at Health Velocity, they're in Nashville and San Francisco, great guys.
Yeah, great firm. Absolutely. Very, very successful firm. Coral Care raises $13 million to scale in-home pediatric therapy. So this is a Series A led by Haymaker Ventures with participation from A.C.A, friends of the firm, Peterson Ventures, Alley Corp, Jefferson River, lots of folks around the table. Gray Matter. I know those folks. So let's see here. A platform for in-home pediatric therapy, and that this funding is going to support their nationwide expansion.
Yeah, I think it's difficult to see how a pediatric visit at the home really scales, but a bunch of smart investors that like to see how it evolves.
All right, moving into policy. J.D. Vance announces a pause of nearly $260 million in Minnesota Medicaid funding. The pause is the vice president's first action as the new leader of a task force on government fraud. So we are really seeing in a way that I can't quite remember, Vic, the White House actively removing funding from states where it's got issues and allocating funding to states where it's got champions. And I think it really is as simple as blue states versus red states. The idea that there is not fraud in red states, I can't imagine that to be true. But here we are, $260 million of Medicaid funding. It's I don't know. I mean, for me, I just think there's all sorts of unintended consequences. There's all sorts of impairments that are going to happen to care being received. There's all sorts of, jobs that are going to be lost, and then people will inevitably have to, find new jobs. Now, we'll see how long this pause lasts, but the political games that are ended up, impacting people on the ground trying to deliver care and trying to receive care, to me, it's just getting to be, a bit much. I understand that there may be some systemic issues. Go in there, maybe you go after specific people, specific organizations, but to pause this much funding to the state seems, really, really likely to cause a lot of damage.
Yeah, no question. It definitely seems like the Trump administration is helping states where it has champions and challenging or pushing states where it doesn't has enemies. I mean, I think the Tim Walz and JD Vance feud has been going on for a long time. They don't get along. I think there's an opportunity for the Dems to just say, we're going to do an investigation. We're going to clear out any fraud, and then let's get back to the business of taking care of our population. They just need to say that, and then it will all shift. The population, like the PR, will all shift to supporting Minnesota. I don't know why they don't say we're going to get rid of the fraud. I mean, it seems like they're giving the Republicans too much of an opening that's foolish. But that's where it's unfair, but I think they also need to just say, we're going to find the fraud and root it out.
Well, I don't know. I feel that I've seen, multiple times where Governor Walz said that, said, hey, look, if there's fraud, we're going to root it out. I mean, I think the way this whole story started was with citizen journalism, and okay, that's great. That's part of social media. That's part of the democratization of media and the internet. But I don't know, as a general public, I don't know that I've kind of landed with verifiable proof that the scale of the fraud necessitates this type of action, right? So, again, to me, this is, I really don't care who's in office. I really don't care what party. I'm solely thinking about the people on the ground in Minnesota, right? The people who need to receive care from Medicaid and the people who are there to provide care to people who need care, that are in the Medicaid program. That's who I'm thinking about. There is no way all of the people that are going to be impacted on both sides of that equation are responsible for fraud, right? So this feels like unduly punishing people who had nothing to do with anything, because of a political beef between two guys who had it out in a vice presidential debate, a year ago. So look, I have to disagree with you. I can't get behind the idea that somehow this is the Democrats' fault for their positioning of it. It just seems like the political wars in the United States are intensifying in a way where the collateral damage is us as the citizens and as society.
I agree with that completely. No question about that.
All right, next policy story. CMS unveils new initiatives aimed at cracking down on healthcare fraud. So more in the fraud category. Vic, tell me what's going on here.
This is just related to that. This is CMS following up on what JD Vance was sort of projecting. Oz and CMS is, sort of digging into all of this fraud and investigating it. So it's the same kind of similar story.
It's just such a huge number, right? It's just such a big number. And we're in a time where we've had multiple government shutdowns, right? Some more targeted, the recent, one targeted around DHS, resulting in quasi shutdowns of TSA pre and global entry. Okay, that's not quite as severe as the last one, but clearly there's so many negotiation tactics kind of constantly going on in DC, and it's like I feel as the general public, it's very clear they're fighting. We know that much, right? But where's the clarity that what they're fighting about is worth the impact to the citizenry, right? Like that's the part that seems to be consistently missing for me.
Yeah, and can they focus on really helping the people that live in Minnesota and in all the different states and not worry so much about getting points in the media? But I think that is where we are, unfortunately, is it's a media scorecard.
All right, next story. This is from the New York Times. New ACA plans could increase family deductibles to $31,000. The Trump administration is proposing Obamacare plans that it says will lower health insurance premiums, but critics warn they would make care unaffordable. What's going on here?
Yeah, so we talked about this a little bit last week. The Trump administration is opening up the requirements for ACA plans. So you used to only be able to offer gold, silver, bronze, and then a couple of other choices. So there's a lot more optionality, and those optionalities are creating very high deductibles, high co-insurance. So like after your deductible, you don't get the insurance company to pay for 100%. You're still sharing the cost. So obviously it's cheaper to buy that insurance, but you're getting a much lower product. And so it's going to lead to, I mean, if you do 1,000 people, some percentage are going to get sick and have significant medical bills. And those people won't have the coverage that they're used to having. And then it kind of ties to the next story, which is multiple states are trying to remove medical debt from like right now you can't go bankrupt and get rid of your medical debt, which does not make sense. I mean, every other debt in the world, you buy a car on credit, whatever, you can't pay it, you go bankrupt, and it's a penalty box, but you move on. Medical debt, you can't do that, which is, I think, not right. And then, so these things are, to be able to be bankrupt, they're also not allow wage garnishment. And so these are two sides of the same coin. I think there's going to be a lot more personal financial responsibility as people buy plans that are cheaper, but they don't really think through what will happen when they have to pay. And then various states are trying to make it slightly softer landing, even though it's going to be really difficult.
Yeah, well, when you strip back the remedies that a collector of medical debt has to, be made whole, that impacts the bottom line of health systems, right? And
right.
I think that this is this is one of those issues where we're looking at the continued increasing likelihood of uncompensated care. And part of this is because of the K-shaped economy, a weakening middle class, the rising costs of healthcare, and now also restrictions that collectors are going to have on making good for outstanding medical debts. So more and more, look, I'm all for protecting consumers, especially in healthcare, because just we've had a history of surprise bills. We have issues with price transparency. There's a million reasons why we need to have more consumer protections in healthcare. But right alongside with that, this creates more pressure for the healthcare industry, in particular for health systems and doc practices. And so just more pain to go around for the healthcare industry on this one.
Yeah, no question. I mean, you have to pay the bills somewhere. And so if we don't pay them as an ACA with higher coverages, people are going to pay it, or docs are going to get less money. And there's not enough cushion in any of these areas. The consumers don't have enough money. Health systems are super tight. It's just going to be difficult next couple of years, I think.
All right, moving to payers. This is HR dive. Worker did not plausibly argue obesity was a disability, the First Circuit finds. In a lawsuit filed against Cigna for refusing to cover weight loss medication, a Maine worker described the condition and its impact too generally, the appeals court said. What happened here?
What happened is this worker claimed that I think it was a Hampton. They wanted a GLP-1 because they are obese, and it was causing them problems. They didn't define it clearly enough. And so I think there's going to be lots of other lawsuits now that now it's clear why they didn't win. I think they'll reframe and go back again. But it's, people trying to get coverage to GLP-1 medications.
Yeah. And it's a problem. Somebody who I know well, who is, a senior citizen, and, I would say is probably, a prime candidate. I've recently learned couldn't get it. Couldn't get a GLP-1, and so the continued raising the bar of criteria to get access to these drugs, I think, is teeing up for just one more big smackdown coming from the government. We're not going to go in depth into the State of the Union, but generally speaking, President Trump's comments towards the healthcare industry, whether it was payers, providers, or pharma were all friendly to the general public and unfriendly to the industry, right? The idea is basically that the healthcare industry has been greedy, has gotten rich off the backs of Americans, and that, Trump is there to stop that from happening. When it came to payers, it was just generally they've just gotten too fat. When it came to providers, it was about price transparency. And when it came to pharma, it was about accessibility and the cost of the drugs, right? And I think this GLP-1 drug thing is really going to end up finding its way into, the press office of the White House and subsequently on the front desk of RFK Jr. to kind of figure out a way to make these drugs more accessible, because there's just a lot of overweight and obese Americans, and this would presumably lower the cost of care if more of them had access to it.
Yeah, no question. There's a lot of patients that could really benefit from a GLP-1 for several chronic diseases. I mean, it's been studied widely. And I think it's short-sighted for payers to not provide it. And yet that was what the fight was about. I think you're right. It's going to be a continued process.
All right. New York secures more than $2.5 million from Emblem Health over ghost networks. We've talked about these ghost networks. They're just not well managed. They're supposed to be providing access to providers, and then you go to find a provider, and even though they're in the list, they either don't exist, they're not in network anymore, maybe they're out of business. These networks are just not well maintained, and so New York is securing $2.5 million from Emblem Health over failing to manage their network properly.
Yeah, so this was particularly in their mental health provider network. They had inaccurate lists where the physicians were either not accepting Emblem Health coverage or they weren't accepting patients at all. And New York proved it and got the settlement.
All right, let's move to pharma. Novo Nordisk shares plunge after obesity drug fails to beat Zepbound. One blow after another for Novo. I mean, they just cannot get out of Eli Lilly's shadow. It's kind of sad to watch. The organization that kind of brought GLP-1s to prominence, at least from a brand perspective. But execution-wise, for really a year and a half straight, have just gotten beat to the punch and can't manage to actually put better drugs out there on the market, more effective and better drugs on the market.
Yeah, no question. Their new treatment, it's called CagriSema, is another new type of weight loss treatment, and it failed to achieve the same results as Eli Lilly's treatment. So they got 23% weight loss after 84 weeks. Which is impressive, but Eli Lilly got to 25.5%. And so Novo just keeps coming up a little bit short. And yeah, the stock market really suffered.
On the other hand, Eli Lilly Zepbound gets the FDA okay for a multi-dose pen. And so now they will deliver 4 weekly injections from a single device, continuing to make the form factor better for the patients who they're serving, continuing to grow. This is another win with the FDA that they have here. Eli Lilly just marches on week after week with good news.
I mean, it's a great benefit for consumers. They can either buy the multi-dose pen or a single-dose pen. It's their choice. And of course, that's going to be very popular.
All right, let's get into crypto. We haven't had that many great stories here lately about crypto, but this week we've got a couple. And this is not sort of Bitcoin. We're into stable coins and platforms. So starting with Circle. Circle Internet's quarterly profit surges on stable coin demand. The world's second biggest stable coin grew in the late 2025, defying a crash in Bitcoin and other digital assets. So truly, stable coins have been the wonder product for crypto over the course of the last year and a half. And I think they've also been very good for the US dollar, at a time where the U.S. is engaging in some very aggressive geopolitical moves, and that does threaten to impair the U.S. dollar's value as other countries look to bolster other currencies and not be so dependent on it. Distribution of more and more dollars via stablecoins has kept the circulation and the viability of the dollar, I think, higher in the face of what would have been, potentially an even bigger drop for the dollar. And so Circle is kind of the United States' big stablecoin issuer, and they had a really, really solid quarter.
Yeah. So, I mean, they make money by holding treasuries that pay 3, 4, 5% annually, and then using that to float a stablecoin that is not paying interest, but is always worth $1. And so really the way to think about their earnings is that that sort of float in circulation is how much they're getting that arbitrage, the interest arbitrage on. And so they have 75 billion that they're getting, an annual 2, 3, 4% on. That's up 72% from last year. And so it's just a really strong engine that's going to keep growing. And, exciting. And you're right. It's been the first really breakout use case in crypto. I think there'll be other ones, but stablecoins has been the place where, and I think it's for a lot of, valid use cases. You need to transact with someone in Mexico across the border. You just sort of put in a stablecoin and it's easy to do. You don't have to worry about the transmutations between US and peso and all those things.
Yeah, exactly. And I think it is worth just at least putting a little footnote here that, this week there's been a lot of talk about the ability for AI agents to leverage crypto, specifically with stablecoins, for payments, agent to agent work. And, I think with the rise of OpenClaw, there's been a lot more talk about what can agents do autonomously, independent of humans at all, when working in coordination with each other, and how will they sort of exchange work for value. And stablecoins plus, the introduction of new payment protocols that crypto enables is really sort of a use case that I expect to see rising over the course of the next months, not even years, but I think months.
Yeah, no question. I think it's going on right now. And it just makes sense. Like, I'm not comfortable giving an agent my credit card. That makes me, even if you can put guardrails and controls, I'm not comfortable with that. I am comfortable. I haven't done it yet, but I would be comfortable funding a wallet with $10 in stable coins. And then if things go off the rails, my total loss is limited to that $10 as a way to begin testing. I mean, the agent-to-agent fees are going to be in micro pennies. It's going to be very small. So you can do a lot with $10 in testing, and then maybe you give it $10 a week or something. It's a much more controlled way that I think is going to drive huge adoption.
And really, Coinbase, I think, has been critical in driving agent-to-agent payments with their developer network and with their support of that protocol. But this week, Coinbase had other big news as they pursue the everything exchange concept with the U.S. stock trading debut. So, we have seen so many people talking about the tokenization of all things. But of course, you want to start with things that people are already trading, at very, very high volumes. And what gets traded at higher volumes than the United States stock market, right? And so tokenizing a reference to U.S. stocks is something that Coinbase is now enabling. On their exchange, you can trade stocks, you can trade, ETFs alongside the crypto. And Coinbase is just trying to be an exchange for everything. They started creating a beachhead inside of crypto, and now they're just saying they're going to be the one financial app to cover all things. And so really, big moves from Coinbase over the last 12 months. They're trying to be a bank. They issued their own Amex credit card. They have their own sort of IPO platform specifically for token launches. They have a deep partnership with Circle, so USDC is embedded throughout the app, and now US stock trading is also enabled.
Yeah, that's right. So Coinbase, really, I think of them as they were the first, easily for middle America, front door to crypto. Like, you could easily sign up, and the interface was really simple. They have a lot of people in the US that their experience of Bitcoin and ETH and stablecoins is through Coinbase. That's kind of how they interact. And they're now sort of holding our hand and helping us understand that, gosh, I don't need to wait until the market opens at 9:30 tomorrow morning to buy Alphabet. I can put that in now. Now, they're only offering limit orders after hours, which makes sense. It sort of allows them to manage that sort of arbitrage where they might be exposed. So, but it's going to help a lot of sort of people that are not deep into crypto really understand the benefits. And then I think the reason to pair with the last news is I think a lot of the agents are going to be, this is going to be programmatically available, right? So agents can then they can, complete their own index. Maybe they have their own view of an AI benefit index, including 20 companies that are going to benefit by AI. You can make your own index through composing these different Coinbase wrapped stocks in a way that's going to be really powerful over the next 3 months.
Yeah, I mean, look, Coinbase's steps over the last year have been really, really impressive. I would pair that with Robinhood. I think they've kind of been number two in this race to become the everything app. But Coinbase has sort of more of an institutional edge as to being totally retail focused. And it's just the pace of releasing new features right now, really across all of tech, is unprecedented. Right? It's an amazing time to be in technology and know that every week there's going to be some really groundbreaking release that comes out. And I think underlying all of that, Vic, underlying all of this rate of change in innovation, really at the end of the day is AI. So let's shift to AI. We're going to talk a little bit about health AI, and then we're going to cap off talking about Anthropic. Starting with health AI, Open Evidence releases AI integrated dialer feature to expand its reach with clinicians. What's going on here?
Yeah, so Open Evidence has been the gold standard because it only works with clinicians. You have to be, you put in your NPI number, your national provider number. And so I haven't been able to test it because I'm not a physician, but they have been like really the partner for physicians from the beginning. And now they're offering this like dialer where as a physician, you can call in and it's a HIPAA protected communication, just like you might call a colleague. You can call in a voice interaction as opposed to typing through a chatbot. Maybe you go back and forth around some details about a case. And it has all of the research and academic literature sort of compiled and sort of made perfectly for that use case. That's why they don't allow patients and other people in. I think it's really smart, and they'll continue to expand other ways to interface with it, I think.
All right. And last story in the health AI rundown, LabCorp expands Path AI Pact to roll out digital pathology platform in the U.S. LabCorp is one of the two big lab companies based in the U.S. Their pathologists will use the software to review, interpret, and manage digital images of slides for primary diagnosis.
Yeah, so, LabCorp, it has a huge distribution network. They are one of the two big players. And I think it's important that they're now introducing AI, Path AI, to, really sort of take the digital pathology, the PAC systems that we have had for a while in imaging, and then bring it to all kinds of lab testing, blood, urine, all the different form factors. I think it's really interesting. I think there's going to be a lot of opportunity there. And that sort of ability to turn around the results more quickly, more accurately, maybe use it more often, I think is really valuable.
All right. Story of the week, which includes breaking news that came out literally while we hit record. There has been a war brewing between the Department of War and Anthropic. Secretary Hegseth has given Anthropic until Friday. Today, normally we record on Thursday, but you were traveling to the mountains of Utah, so, we're recording on Friday. And Secretary Hegseth gave Anthropic until today to comply with the Pentagon's requirements for all frontier model AI providers, or they would not be all members of the federal government, particularly the Pentagon, would not be allowed to use Claude. And this was a big deal, right? Because I was talking to Emily earlier about this. One of the big pillars of Anthropic has been the conscientiousness that Dario Amodei portrays and has portrayed since before Anthropic was even considered to be a real player in the space, right? Through his writing, trying to portray a picture of a company that is looking to bring the best of AI to people, but with things like a constitution and with thoughtfulness and with so much respect for human sovereignty and privacy and putting guardrails up for, creating biological weapons and all these types of things. Like if I think what is the brand of Anthropic, I really think it's conscientious AI, right? That's like the foundation of what they're there to do. Their Super Bowl ads, while they were making fun of OpenAI for integrating ads in there, what they were really saying is that they are too thoughtful to do something like that, right? And this, I think, was a major test of their brand. A major test of their brand. And here we are on Friday. Yesterday, Dario Amodei went public on the Anthropic website with a statement talking about how Anthropic respects the need for national security and a variety of different things, and the ways in which Anthropic has been a partner with the federal government, but essentially did not budge. And Vic, just as we've been recording, I got the notification while we were on a Wall Street Journal story that 4 p.m. ET, Trump will end government use of Anthropic's AI models as a result of the tension that has grown between the Pentagon and Anthropic. So, whether this is a pause or whether this is going to be something more serious and more durable, we will see. But here is, the quote from Trump's post on Truth Social. I am directing every federal agency in the United States government to immediately cease all use of Anthropic's technology. We don't need it, we don't want it, and we will not do business with them again, with an exclamation mark.
Yeah, it's been a wild story to watch. I'm not sure it's finished, but I agree completely. I think we're watching right before our eyes the question unfold of, are these AI companies going to be more powerful global players than state actors? The U.S. is the most powerful state actor. It has the biggest military, spends the most money by many orders, by a lot. And Anthropic standing up to them. And you're right, they have a brand that potentially could stand up to them. But what they have, where they've drawn the line, and I think it is great for me as a citizen of the United States that they drew this line. It's going to maybe hurt them in the market, but this is part of their PR campaign to combat it, is they're saying we are not comfortable with using Anthropic for mass domestic surveillance, and I don't really want that either, and fully autonomous weapons where there's no human in the loop. I think that is laudable and takes a lot of guts, and I think eventually the Anthropic brand could be stronger, but it's going to be really challenging over the next few months because the U.S. government's very powerful, and you don't want to make an enemy of Trump and the administration.
Agree with everything that you just said. But, in my conversation with Emily this morning, I said, look, I am not sure. This is one of those situations in leadership where there's really no great outcome, right? And yet you have to make a decision, right? And I think in this case, while being cut off from the federal government and all the people who are very, very loyal, right? There may be many people who are very loyal specifically to MAGA, not so much the Republican Party, but I think much more to MAGA, that may cancel their clawed accounts, right? Okay, sure. So that's going to be a deep chink in the armor. It will be a great impairment and, probably an ongoing annoyance. Their brand was tested and their brand has been elevated, I believe. This was an incredible test of their brand. And for many people who chose Anthropic because of their brand, as opposed to an open AI,
right.
I think the loyalty on the other side of this is going to be unreal.
No question. Domestically and even more so internationally. They're going to be catapulted, internationally, certainly. And it's going to be a drag. I think there's certainly there are MAGA people that will cancel. There's also a whole bunch of entities that are tied to DoD and need to only use vendors that are approved by DoD and therefore won't be able to use Anthropic. It will spider out into, I think, a decent percentage of that government contracting side of the business. But I think you're right. They were challenged really around their values. Anthropic didn't waver. Now, they might suffer for that, but they stood by their values, and I think that elevates their brand. They can be trusted more.
Look, 100%. Like, whether you like them or you don't, the fact that they said something and stuck to it, knowing what the penalties would be, that's what a brand is. A brand is not what you say about yourself. It's what you do and how other people interpret what you do. And I don't think it could be any clearer. When Trump comes out and does a post about you on Truth Social and says he's done with you, because you didn't do what he wanted you to do.
Right. Yeah.
What more is there to say?
That's a test. That's a huge test. And they passed it from the values culture side. And that means that they're willing to take whatever market pain will come. And there will be some, I think. But I agree. I'm not canceling my cloud account. I'm more comfortable that when the chips are down, when there's really high stakes, Anthropic's going to try to do the right thing, whatever they think that is. And that seems like a company that I want to work with.
It's remarkably impressive in a time like this. This was a huge test for any company. Most companies would have totally folded.
Yes.
And reasonably, like understandably, most companies would have folded. But this is something else. This is something else. So we will see what lies ahead for Anthropic in the weeks to come. Right? I mean, I don't think it's done here. I think there will be more conversations and more things to happen. They're domiciled in the United States. Trump is not hands off in the market. He's hands on in the market.
Right.
And so I think an enemy was made. I think it's probably fair to say that, but a brand survives. And that's, I do have to just acknowledge the specialness of that, because you just don't see that often anymore.
Yeah. And you don't get the opportunity to be really tested in your values. You put the values on the wall and you're not really having to make trade-offs that are serious trade-offs. And it's great to see a company take it seriously and make, I think, the right decision, even though there's going to be repercussions. So I'm going to go back to my Claude coding and, use up a bunch of tokens for Anthropic.
Amen. Same here. All right, man. Great show. Get back to the slopes. Have a great weekend. And I will see you next week.
Okay. Thanks, man.